Hey everybody, Boris speaking at Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for September 11th to September 15th of 2017. And of course, this was the week of the loonie. The Canadian dollar just decimated all sorts of support, cut through everything all the way up to, but not through the 120 level, which is going to be a very key level that we're going to discuss as we look at potential trades this week. Aussie dollar also got a little bit of a bid here. This is all basically anti-dollar flows. The carry trades, both Aussie and Kiwi, performed well this week because U.S. yields just simply shrunk down to 2%. The lower U.S. yields go, the better the Aussie and the Kiwi does. And the critical question here, I think, going from this point on, is will the U.S. 10-year hold at 2? That's going to determine whether the Aussie or the Kiwi really have any further upside as we go along. On the calendar front, not much in the COM dollar land. Really only just one big event, which is the Australian employment data on Wednesday. That looks to be mildly bearish. We're actually not even mildly bearish. We're bearish all across the board. 3 falls, both manufacturing, service, and I guess construction, or at least maybe just in manufacturing and service. So Kathy is very bearish. The Australian dollar, chance here for a miss on the Australian side. Nothing else is really going on in the COM dollar land. Aside from that, no Canadian data. We had the Canadian data this week. We had the very, very strong, surprising Canadian data of the Bank of Canada raising rates, and that was really the big driver that took the dollar CAD all the way down to 121. So really, on the COM dollar land, as far as event risk goes, it's just the Australian employment data, which could be to the downside. The levels have really changed a little bit to the upside. Aussie dollar now looks at 81 as resistance with 79 as support. Dollar CAD is all the way down to support at 120, and that's going to be a very critical level this week, with 124 as a reasonable resistance. And Kiwi dollar also improved with now holding at 72 relatively well as a bid. So looking at the charts here, let's take a look at the Aussie first. Aussie, certainly, remember last week I was really wary of shorting. As a matter of fact, I wasn't bullish Aussie, which I should have been, but I couldn't anticipate such a drop in U.S. yields. But I was definitely not bearish Aussie, and that turned out to be well. Sometimes it's just good just to stand back, stand away from a trade that may not work against. They may work against you. So we stood down. I thought there was no opportunity to short the Aussie because of this nice rounding technical formation. Technicals kind of really always lead us in the direction of where things want to go. And this week, though, we have this very big pop, but having now put up this pop, we didn't close at the highs of the week, and we're coming up against a very significant double top formation of this 82 level. So to me, the whole trade in the Aussie dollar really looks to be congestion between 81 and 82. Now, it clears 82. It has a full clear path all the way up to 85. So that's a completely different story. But to me, I think the much more realistic path is that we kind of stall out. We would have to have just a disastrously strong decline in U.S. yields for the Aussie to continue to go unabated to the upside. So I think the situation here, just as I was not bearish Australian dollar, I certainly can't be bullish the Australian dollar here. If you want to take a gamble and kind of guess a top and short against this 80, 81, 82 top, I think it's a reasonable play against the longer-term double top. So if I would short the Aussie with a scale-up trade against the 82 level. If that gets broken, you're absolutely wrong. But if you can survive the move anywhere in this level, you're likely going to get a turn back down, or maybe even just get a turn back down right away if U.S. yields begin to firm. So to me, the Aussie is not a buy and a very speculative sell if you want to engage in that as you go along. Now, dollar CAD was just a inveterate move to the downside. There was just, it was the strongest trade this week. Surprised the BOC surprised the market with a rate cut, and it just was a continuous move to the downside. We had I can't say disappointing, but not exactly confirming labor data. Labor data was sort of more or less in line today, so that didn't really provide enough juice for dollar CAD to test the 120 line. The low I think we broke the 121 all the way down to 120.60, and that to me seems to be the support for now. The low here is, what's the low over here? 121.27. So we're really we probed the low against this particular low, and you can use that effectively as a reference point. Basically, 2050 to me is a reference point. The ultimate reference point, though, of course, is the 120. If they want to press this down, it's the 120. Notice that oil prices really started to tumble. That weakened the Canadian dollar a little bit, and oil prices could tumble a little bit more on hurricane news because demand for oil is likely to go down as everything is shut down. So, although we don't have Canadian data next week, again, very, very speculative long, but it looks to be like a potential here for a turn trade. We sort of created a near-term bottom. I will show you my favorite near-term bottom trade here against the caddy, and it's really the NTPDN trade because that's a lower volatility trade that could work. Although, given the fact that we're negative Aussie, it's probably gonna be more of a Kiwi CAD trade that I think has the greatest potential for a turn here on the crosses. We'll get to that when we talk about the crosses. For now, though, I think the critical thing here with the CAD is, yes, you might get a little bit more extension here towards the 120-100, but that seems to be the major support. And I would generally take a gamble here on the idea that we get a little bit of a turn here in the CAD and at least a bounce towards the 23 level as we go forward. And then last but not least, of course, is the Kiwi. The Kiwi had a good week. Relative strength here. We've held the 72s. That's why I like the Kiwi here now on a relative basis. So Kiwi made a higher low, held the 72s. Looks actually, if you look at this on a very long-term basis on a weeklies, it looks constructive because you have a whole series of higher lows here continuously. It's a stealth rally in the Kiwi. It's a super, super, super boring, slow trade. But ultimately, it's much better buying than it is to sell right now. So to me, that could be the trade. If I'm gonna trade the CAD to the short side, I really want to trade it against the Kiwi because I think that's going to be the best cross trade to express that move. We'll take a look at that in the crosses section. But for now, I think the takeaway here is Aussie probably stalls, Kiwi should have a little bit more relative strength, and Caddy should turn with weaker oil and just the oversold conditions of the dollar. The dollar, if it has any chance to come back, will come back against the CAD. On a short recovery basis, at least to the 22, 23 level as we go forward. Wishing you guys the best luck, the best trading. Boris, over and out.